Well, first up, here's the news that nobody wants to hear. And that is inflation is on the way back up to its highest level in 6 months. So while the headline CPI, or Consumer Price Index, rose 4% in the year to May, trimmed mean inflation jumped 4.4%, which is well above the Reserve Bank's sweet spot of 2 to 3% inflation. Now, those higher prices were driven by petrol, insurance, health, food and housing-related costs. Unfortunately, all those items are considered essentials. So even if the Reserve Bank were to lift rates again, it would be really difficult for consumers to cut back even further on those things. And after the ABS released its monthly inflation data, the Aussie dollar shot up as there's now a higher risk of an interest rate hike, while the All Ords fell even more sharply as the potential for higher rates means there's more incentive for people to keep their money safe in the bank rather than take a risk on the share market. Now, whether or not the RBA decides to lift rates will depend largely on next month's inflation figures, which are a lot more comprehensive and cover the entire June quarter. So, in the end, the Aussie dollar went up to 66.9 US cents, while the share market dropped by 0.7% after it recovered slightly in the afternoon. And the worst performers were consumer, mining and telco stocks. Overseas, most major markets went up except for Britain's FTSE. And in commodities, iron ore prices rebounded while gold and oil took a tumble. And that's finance.